It's Friday, the 11th of December 2020. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines: regulators around the globe attempt to crack down on the market power of big technology companies like Facebook and Google. That's our main story. Plus, the government issues debt at negative interest rates for the first time ever. Sydney and Melbourne CBDs remain ghostly as workers and shoppers stay away. And cricket lovers receive some good news about the Boxing Day Test match. The big tech companies are under siege as governments work to curb their power and prevent anti-competitive behaviour. In the United States, the Federal Trade Commission has accused Facebook of buying rivals to quash competition, calling on the deals to be unwound. The US regulator claims that Facebook's $1 billion purchase of Instagram in 2012 and its $19 billion acquisition of WhatsApp in 2014 eliminated competition that could have challenged the tech behemoth. In a separate lawsuit, 46 states are suing big tech for depriving users from the benefits of competition and reduced privacy protections and services along the way. Google is already facing a lawsuit brought by the Justice Department, which accuses the search group of illegally protecting a monopoly. In Europe, regulators are proposing much tougher laws to curb the tech giant's power and have already issued billions of dollars in fines for the violation of competition laws. In Australia, Facebook and Google face a new code of conduct, which they've fought vigorously. It will force them to pay for content from traditional media companies. The implementation of the code is being watched closely around the world. The rush of legal cases against some of the world's largest companies has become a threat to their performance, and share prices of big tech have fallen in recent sessions. The challenge for Apple, Facebook, Google, Microsoft and Amazon is that they have been too successful. They have too many users and too much market power. Notwithstanding their dominance, they also face rising competition from apps such as Chinese-owned TikTok. The flip side is that consumers love them and use them continually. Count how many times you have an interaction with Apple, Facebook, Google, Microsoft, Netflix or Amazon today, and how many times you use one of their products. In the end, the market, that's the consumer, wins. But in the meantime, big tech is facing some expensive and time-consuming fights with big government. In a moment, the rest of the news you need to know this morning. In overseas news, United States Secretary-General Antonio Guterres has warned against vaccine nationalism, saying it will disadvantage developing nations. He said vaccines should be a global public good. The US reported more than 3,000 COVID-19 deaths on Wednesday, a new record. DoorDash, the food delivery platform, made its trading debut on Wall Street and immediately almost doubled its IPO price. The company is valued at close to $70 billion, and it hasn't yet made a profit. And the European Union has published emergency plans in case no Brexit deal is signed. The EU and Britain have given themselves a new deadline of Sunday night to come up with a deal, but it's not looking promising. Locally, yesterday the federal government issued Treasury notes at a negative interest rate, the first time ever. It means that an investor paid the government to borrow money. A Treasury note is slightly different to a bond in that it doesn't include a coupon payment. Normally the government will pay interest on the money it borrows, but when investors want safe havens, like government-backed notes, they can be willing to pay for that. It demonstrates how incredibly low interest rates are in Australia at the moment and the appetite for safe investments. National Australia Bank's weekly Economic Insights measure showed that while spending in Victoria has recovered following the reopening of the state, the situation in Melbourne CBD wasn't so good, particularly in areas such as hospitality. A year ago, cafes, restaurants and takeaways in the CBD captured 21% of all Greater Melbourne spend in the sector. Last week, it was just 11%. And a Property Council of Australia survey says that office occupancy in Sydney is less than 50%, up from 35% in September, but well down from 94% pre-COVID. Melbourne is at 13%. Data from the Australian Tax Office shows the top paying corporate taxpayers for the 2019 fiscal year were Rio Tinto and BHP Group, both which paid more than $4.2 billion in tax. They were followed by the Big Four banks and Fortescue Metals. According to the Financial Review, Facebook, Apple and Google combined earned revenue of $11 billion but paid just $200 million in tax. China's Ministry of Commerce said it will levy an anti-subsidy duty on Australian wine from today. This is on top of the tariff slapped on wine exports last month. The anti-subsidy duties are much smaller than the tariffs and were expected, but are still another hit to wine growers. And good news for cricket lovers. The ceiling on the crowd for the traditional Boxing Day test in Melbourne, this year between Australia and India, has been increased from 25,000 to 30,000. Still well below capacity for the MCG, but at least it's a start. That's the Fear and Greed business headlines for today. There's more on all of these stories in today's full Fear and Greed podcast, as well as an interview with Stuart Gregor, the co-founder of 4 Pillars Gin. I'm Sean Aylmer. Enjoy your day.